that day, like, it was probably the single happiest moment of my life because I felt like this sense of freedom of like, I'm going to make it. Like, things are just never going to be the same. It's going to be completely different from here on out.
Where it begins.
Welcome to another episode of Very First Win. I'm your host, Robert Hilmer of Goanna Capital. Today, I'm extremely excited. We have Samir Vasavada on for the pod. He is the youngest tech unicorn in history. I'll say that again. The youngest founder of a technology company that has reached $1 billion valuation. So it's fantastic to have him on the pod today. Welcome, Samir.
Thank you so much for having me, Rob. It's
All
great
right.
to do
So
this.
as mentioned, you're the founder of Vise AI. Why don't you tell everyone what is Vise AI?
Yeah, Vise is a platform for financial advisors that helps them build personalized portfolios. So if you think about the job of most financial advisors, and many people have them, it's to help you make your life's most important financial decisions. It's, when should you go to college? When should you, and how much do you need to save? When should you buy your second home? All of these questions that people have financially, they have a Sherpa that guides them through these life responsibilities. But the challenge is most of their time is spent actually investing their clients' money. And they're not all that great at it, because when you have so many different clients and all those clients have different unique needs, the only effective way to be able to service them is to provide them a one-size-fits-all, relatively generic portfolio. And we know that because every client is different, and some people have different retirement targets, some people have different work preferences because they have concentrated stocks, people have different tax preferences, advisors should service each client individually. So we built software that can help an advisor understand all kinds of clients' different needs, whether they have unique tax preferences, whether they have different income targets, whether they have different risk tolerance, to recommend investments that will help them hit their life's most important goals. And then Vise handles all of the underlying work, the trading, the asset allocation, the security selection, everything the advisor needs to do, focus their time on the relationships. Vise does the rest, with the vision of being, the world's largest technology-powered asset manager. So Vise allows the advisors to focus on the relationship.
And you've got 50 billion in assets on the platform now, right?
Yeah.
And obviously AI is on everyone's fingertips now. How are you using it? How has the business changed in the last year or two in light of AI? What's going on there?
When we started it 10 years ago, my co-founder had done AI research at a very famous institution, and we'd realized that AI is going to transform every single industry, and financial services was no exception. In many ways, because of how human dominated it was, we felt like was the primary place for artificial intelligence to have an impact. Over time, we actually kind of backed away from using AI, and the primary reason why is because it scared people for a long time. I remember I was sitting next to a financial advisor on a plane, and I said, "We're building AI for financial advisors." And he said, "Well, what if the AI doesn't like me?" So over time, we actually backed away from AI, from the core investment front, and focused on more traditional quant methods. And then as the LLM had come out, we had kind of backed into a new use case of AI, which is actually the exact opposite of what we were using for in the beginning, which was, how do we actually explain the investment decisions we made? So given all these algorithms we made that could kind of come up with asset allocations, we created AI that could understand basically why our algorithm was doing the set of things that it was doing, to create kind of natural language, basically summaries on what's going on in the portfolio and why. So if an advisor was sitting with their client and something major happened in the markets, we could explain, "Hey, Mr. Client, here's why we took the set of trading decisions we did to get you to the outcome we did during this kind of period of market uncertainty." So it helped the advisor look smarter to their clients in some sense.
Yeah, I love the business. So as you know, the pod is called Very First Win. And so a lot of pods just talk very generally about careers and all these things. But I think one aspect of founders and entrepreneurs, CEOs, athletes, actors, etc., one thing that's always overlooked is, what was the very first win you had that got you to where you are today? And they're usually milestones before anyone was watching, before anyone knew who they were. I think we met back in 2018 or 2019. No one knew who you were. I was fascinated by your business and looking to help. And I think it's at those moments or those periods when you have these really interesting periods in your life where something changes, and 10 years later, you still remember that moment or that event. So for you, what do you think that was?
I mean, it's funny when you ask me this question, because I've just been thinking about all the losses that led up to that one win we had that I think probably changed my life. So I started the company when I was 15 years old. And between 15 and 18, I was bootstrapping the business. I grew up in Cleveland, Ohio. I had to basically drop out of high school. I was so obsessed with this idea of transforming financial services with AI that it couldn't wait. And like some ideas just can't wait. And this is the idea that couldn't wait. Everyone told me you have to go to school, and then you go to college, then you go, if you're really great in college, you can go work at Goldman Sachs for a couple of years. And then after you're done with Goldman Sachs, then, maybe you can get a bigger job. And then you can finally start a company, or you can join some experienced operators as they go start a company, and you'll have a little piece of that company and it'll be successful. And it was always this constant viewpoint of kind of being de-risked. So how do you associate with people that will figure it out, and then you'll get a little piece of that? I remember I'd gotten that advice from my parents, from my teachers, and I just, thought to myself, why can't I just do it myself? So I did it myself when I had a co-founder. We started building the business. Every day after school, I would go home and I would call financial advisors. How do they think? How do they make decisions? What's the kind of mode in which they should operate in the future? And how do I build software that can support them? And as I started to build conviction, I realized, wow, there's really something here. And I moved to the Bay Area. I dropped out of school, lived in the Tenderloin first, which was, for anyone who knows San Francisco, not a very friendly part of town. And then I moved into a house called the Crypto Castle, which, if anyone has seen Silicon Valley, it was like very reminiscent of
We're
Silicon
going to
Valley.
do another show on the crypto castle.
It was a bunk bed with a whole bunch of various crypto founders who were all very successful before the first kind of run up in crypto in 2017, 2018. And I was living there basically 16 to 18. And I had no money, and I was just kind of living on scraps, trying to bootstrap the company. I would sneak into WeWorks every single day, and I would, basically just trying to get along. And the idea was like, okay, if I can get some customers and then I can get some revenue contracts, I will be able to raise some money at some point, and then I'll be able to pay myself a salary, and like over time I'll just figure it out and it's gonna work. And I was doing this and kind of building the business. We convinced a team of people to work all on equity, and it persisted that way for years. But I was like, well, what's the turning point going to be? And we thought we could build the product, and once we got the product out, people would start buying it, and then we'd be able to kind of finance our lives off of the sales of the product. But the product turned out to be really, really hard, and the engineers we were working with kind of would start cycle through and quit, and we had to go through like 5 different iterations of the product. We would like scrap the whole code base, and it just got to the point where like we were starting to not feel great. And my co-founder is about to graduate high school. And the problem was that, for a while he had told me, hey, Samir, I'm going to graduate, and then I'm going to come move in with you in the Bay Area for a year, and we're going to go build the business together. But then maybe 3 weeks before he was supposed to go and move to the Bay Area, he invites me to his his high school graduation party, where he announces he's going to college. He's going to UPenn. And I'm like, well, I'm screwed. Like, my co-founder is going to UPenn. I've been kind of 2 years living in the Bay Area. Like, I'm out of money. My family doesn't like me that much. I don't have any university credentialing or anything to, get into university. Like, this business just kind of has to work. Like, I don't know what I'm going to do. So I decided I'm going to move on to Runick's dorm room floor. I'm not going to leave until he drops out. And I'm like, okay, well, what's it going to take to get him to drop out? And, first day of Penn starts. He's got a mattress topper that's like this thick, and I sleep on the mattress topper. And as we're there, I'm like, okay, what's it going to take to get you to drop out? And his parents go to Runick and is like, look, if you raise $1 million, we'll let you take a leave of absence. And we're like, well, how are we going to get someone to give us $1 million? Like, this seems really challenging. So we started cold emailing investors just on LinkedIn. I'm pretty sure that's how I might have met you. Just cold emailing, reaching out to as many investors as we possibly can. And we just got rejected left and right. No positive momentum. And then, we'd applied to some Penn programs. We'd got a couple $1,000s in grants that kind of kept stringing us along for a little bit, helping kind of cover some of the burn rate. And we just got to a point where like, okay, I think it was September, October. And we're like, okay, if we're in December and we can't, raise money, let's just, throw in the towel. And no, it was January the next year. So it was January of 2019. And we were saying if we made it the whole year and we couldn't raise money, let's throw in the towel. So we had gone and we'd met these 2 guys, Nat Turner and Zach Weinberg, and they had said, look, you guys should meet First Round Capital. We met First Round Capital. They had unfortunately passed, but we had a lot of good conversations, and it gave us a little bit of motivation talking with the founder, Josh. And Nat and Zach said, you know what? You guys looked kind of like us at UPenn. We actually finished college, and we ended up starting this company that's worth billions of dollars. We'll be your first investors. And they gave us $100K. And that was like my first mini win. That was like, I think we can do this. We're gonna figure it out. And like I remember I took the bus to New York for a meeting when I was meeting Nat, and Runic joined and we had lunch and I was just euphoric. I was kind of like running around the street so excited. I knew we were gonna be okay because we had 100K to kind of plug the gap and just kind of continue operating. And we'd gone back and we just continuously tried to meet more and more people. And there was a person on our team who had worked at a company called Future Advisor. And Future Advisor was one of the first robo advisors. It had gotten acquired by BlackRock for a couple $100 million. And he had tried to send a note to one of the founders, and the founders kind of said that they weren't interested, and there wasn't any like this was a really hard business and was unlikely to be successful. I said, hey, can you try sending a note to the other founder? So then he sent a note for the other founder, and I got coffee with him in San Francisco. His name is John Shu. And John was like, this like could work. This is kind of interesting. This is almost like what our hidden insight was after we left. So many people were thinking, how do we use technology to replace financial advisors? No one was thinking, how do we use technology to empower financial advisors? And we'd started to have more and more dialogues with John. And John said, look, I'll introduce you to some of my first investors. And one of his first investors was a guy named Ben Ling. And Ben Ling had said, okay, I'll if John speaks highly, I would be interested in investing, but I can only put in 500K. And I was like, well, I think we need to raise $1 million. The terms weren't great. It was something like $4 million. And he's like, well, if you find someone else who's willing to write you the other 500K, and it could be a bigger round because I think you guys need more money to get this thing off the ground. I'll do the 500K. So then I'm like trying to play this game of like, how do I get Keith to actually, end up investing and push this through a founders fund? I don't really know that many people that know him. So how do I kind of capture his attention? And then, how do I do this all really quickly? Because we pitched a whole bunch of investors and we were kind of at the end of the line. Like this is finally the people that were willing to say yes. And, we're starting to kind of lose a little bit of momentum, but we have some. So I get some other founders to kind of reach out to someone else at Founders Fund and vouch for us. And it was a whole bunch of kind of networking to understand who could kind of move the needle. And then I ended up meeting Delian. And Delian, who had been kind of Keith's number 2, had said, look, this is exciting. Like, what are the terms? And I was like, look, and I kind of had to play some like hard to get, I think there's this other investor who's going to come in, at this price. And I had to play the game a little bit. And Delian was fine. Like, okay, you know what? I'll do it. So then Delian had kind of convinced Keith and Founders Fund to do it. They had sent over a term sheet. It wasn't at an amazing, exciting price, but I kind of figured it out. It was probably the hardest seed round to ever raise. But that day, it was probably the single happiest moment of my life because I felt like this sense of freedom of like, I'm going to make it. Like things are just never going to be the same. It's going to be completely different from here on out. I have someone who's, vouched for me. I have a kind of a big brand name, which I never had once in my entire life. And I knew that I wouldn't really stop at anything for this company to, not be successful. I would never quit. Now that I had this kind of fuel to basically keep going. And from there, Runic had dropped out of school. We had started to garner some traction and everything kind of worked out. But it was a 3-year in the making, just complete challenge to raise this first round of capital that enabled us to kind of get going. That, it was probably the single thing in my life that, changed it the most, albeit kind of small by today's standards. I think back in 2018, 2019, people weren't really willing to write teenagers checks. I don't think it really happened all too many times. So it was pretty exciting.
It's huge. If I can speak on your behalf, I think the lesson you probably learned there for the first time, and this isn't my quote, but the quote is always be on the right side of scarcity. So what you were really probably creating in that last moment of trying to get everyone across the line was some degree of scarcity. In other words, there's this much in the round to go around. There's a range of investors who all want to come in. People are coming in. I need your answer. That's, I'd imagine, probably one of the lessons you learned there.
Exactly. No one was willing to make the move. No one was willing to make the first move. So I had to figure out, how do I make people, to your point, feel like they're on, I was on the right side of scarcity. And that was really hard. And I never had that problem in preceding financing rounds because they were so hot and I kind of learned this lesson. But it was, how do I get people to move? And it's like a hard thing to do, especially when you don't have kind of pre-existing relationships with people.
Yeah. I think every business, whether CEO, founder, whatever, athlete looking for an endorsement, you have to find ways to be on the right side of scarcity. And I think underpinning that is a true ability to walk away. and just accept that it may not happen. Lay it out on the line, tell them what needs to happen. And if they don't get there, they don't get there. But I think you have to have the guts to do it, else you won't be scarce.
100%.
And the other thing I think that you probably learned along the way there was, do you know who Nassim Taleb is? Have you
Yeah,
heard of him?
for
Yeah.
sure.
So in his book, there's a couple of books. One's Fooled by Randomness, and then there's another one, The Black Swan. He talks about the importance of positioning yourself as often as you can in your life to benefit from black swans or tail events. And I think what you were probably doing, you haven't necessarily spoken about it too much, but I think what you were probably doing was trying to get yourself exposed to as many of these black swans as you could. So you were probably texting 100 people, emailing 600 people, calling 50 people, catching the bus here, bus there, just throwing out all these potential avenues to win, just saying, well, one's going to win and one will be my black swan.
Yeah, that's true. And I think my lesson looking back on that was maybe that was the right thing to do at the time, but I should have been a bit more intentional. I think that I sent too many emails that were, I would say, not actually, they were probably pretty thoughtful in the grand scheme of cold emails, but I sent I kind of casted too wide of a net. And I think what I should have done was go very narrow and very deep. So oftentimes, like, I get a lot of cold emails from young founders or people looking for work, and they're very generic. And I'm like, if you want to capture someone's attention, you have to be deeply thoughtful about like why that person should spend 15 or 20 minutes getting to know you. And the ones that do have oftentimes led to, amazing outcomes because I know what it was like for me. So I think it's about being really intentional about who's the person you're targeting and what can you help them with and what can they help you with that will lead to a better outcome.
I agree. And I actually, what I like most about your story is the conviction and the courage to look past college, even high school, and just conventional wisdom. I remember telling someone maybe in 2022 or 2023, this was before AI became a thing, that in 5 to 10 years, college will be looked at as a pretty meaningful waste of time for large portions of society. And they said, no, you'll always need it. You won't be able to get a job. It's too much of an advantage, et cetera. And I said, oh, you'll see in 5 or 10 years, people's mindset will change. But I thought I was ahead of the curve saying that 3 or 4 years ago. You were saying this in 2017, 2018, and actually living it.
As crazy as it was, when I was in 8th grade, I was telling the teachers, I don't know how much this rat race really makes all that much sense. Because, it was just first principles thinking to the standpoint of, okay, like I want to create a bunch of economic value. I want to like control my own destiny. I want to build something. And I was like, what? At the end of the day, the thing that you should be thinking about is building something and actually going and doing the work to go build something and like starting from the bottom of that particular thing and working your way up in building that particular thing, not necessarily all of these credentials or other things that don't necessarily directly relate to building those, that thing you're trying to build. And that's what just never computed with like kind of the traditional path. If you even zoom past college and just look to, then you get your internship and your analyst program and you kind of zoom out, I'm like, what about all of these years of doing something is actually helping you build some particular thing that you think will have an impact on the world? And my answer was, it doesn't. The only way to go do the thing is to go do the thing.
That was a great conversation. I appreciate your time, and let's catch up soon.
100%.
Enjoy. Goodbye.
Where it begins.